Hello, YouTube and dear crypto enthusiasts, and welcome to another episode of Equibit Crypto. Today, we are looking at inflation and how the current conflict is going to affect inflation and interest rates in the short term and in the long term. And in the end, we will see what kind of assets should appreciate in this sort of environment and also try to see if we can predict the effect this will have on cryptocurrencies. So let's go through the factors that is going to create upwards pressure on inflation. So refugees, oh, I missed an either. They need to buy everything they did not bring with them from the country which they fled into to the new country. So they need everything from washing machines to places to live, apartments, clothes, food, of course, and this is going to make upward pressure on inflation because it's more money chasing the same amount of goods or even less goods. So this is going to have to be paid for by the government where they seek refugee. So this is going to be paid by the taxpayers basically. So less money is going to chase the same amount of goods. This is going to create inflation. I don't think it's going to be a big issue, people protesting to pay some more taxes in order to help the refugees, because now everyone needs to stand together and give basically and help each other. So that's the first point. Then, of course, with every war, energy prices and oil prices go up. Russia might cut the gas supply. Also, there is less corn available because production in Ukraine is being disrupted. So it's not easy to farm when there is a war going on. So this is also going to increase inflation. And then we have the inability for governments to increase interest rates. This is probably the one that is going to affect crypto the most because of increased government expenses from these two here. So that is basically going to in even higher deficit spending by the government. And also we need to add that the governments around Europe now needs to increase their military budget, which is even going to create more deficit spending if they're not willing to increase the taxes. And this means that the government debt is going to grow and they cannot spend money on paying interest. So we probably is going to see the interest curve turn around and go downwards, or even or maybe just flatten out and not increase like was thought previously. And we also have the weaponization of the dollar, the euro, and the yen. So no, there will be no buyers of government debt. So this will basically force the central banks to do more quantitative easing. Because what we have seen with the dollar now is they are willing to drop this nuclear financial bomb and freeze assets that are held in dollars. This, of course, China is watching this, and China and the Saudis, they are the biggest buyers of US debt, of US government bonds, basically. So they will probably think twice before they take on more American or European or even Japanese debt, and this will make it so that the only one left to buy this debt is the Federal Reserves, or in Europe's case, the central banks. And this is basically expanding the balance sheets through QE to provide liquidity in the system. So the only thing that I can think of that is going to be a downward pressure on inflation is that there will be less pressure on salary due to there will be more workers available. This is more midterm to long term once the refugees get settled and get a job, because many of these people coming are highly skilled workers and can easily join the workforce. It depends a little bit on which country they go to. if it's probably easiest for the worker or people going to the countries near them rather than further away. But I think there will not be too long before many of these refugees get a job in the countries they are seeking refuge in. So, when we put all of this together, this is telling me that we are going to see an environment where we have high inflation and quite low interest rates. In other words, we have negative real rates. So, when you take inflation and subtract the interest, that's the real interest rates. So that means that this is going to be negative, or the other way around. You take the interest rates and then you subtract the inflation, of course, and you get the negative real rate. In other words, you get paid to borrow money. So, but in the short term, I think emotions of fear will be dominant in the market. So I would not be surprised for the dip to continue, and then we will see once the fear comes down and people are starting to think rational, we will see assets price growing. So let's have a look at the interest rates, the market rate, what that have been doing lately. So here we are looking at the market rate for the 10-year US government bond, and that have fallen about 15% the last week. And up here we have the line that have not been broken since the 80s, and this where we were expecting the interest rate to go to top out and then get rejected and go down again due to government debt and the inability to actually pay these kind of high fees or higher fees than this. Now, this might have been the top already, or we might go a little bit higher, but I'm pretty certain we will not go up and test this in this environment here. So that is probably positive for tech stocks and crypto. We look at the Bitcoin chart, it can be hard to time the bottom, but I think that the bottom, I don't think we will go below 30K. The bottom might already been reached here. It's hard to say, but long term, I am positive that we will see crypto being really strong once the fear is out of the market. Once we have clarity what is going to happen, how the interest rates are going to be set by the central banks, and then we will see crypto probably shoot for another rally. But if we look at Bitcoin right now, we are currently breaking out from this downward sloping channel, and the target for this is up here at 49,000. As we said earlier, that we would probably expect some resistance to come here in at 46,000, and that happened exactly as predicted. Currently, we are in this channel here now, um, bouncing up and down. So next support level is down here at 37,000. And if we break out of this channel, we're going to see probably up towards 56,000. But right now, I think this is very risky, as we recommended gold earlier a few weeks ago, that have been performing very well now, and Bitcoin probably not so much. Long term, of course, very bullish on crypto. This is something that is here to stay. Then we have also agriculture. Like Bill Gates, he is the biggest farmer in the United States. I think he started to buy farmland around here, or maybe it was even earlier. And this is really booming now. If you look at the Van Eyck agriculture business ETF, it's currently about to do a breakout, so this might be a trade opportunity as well. As you see, we are right here now, ready for a breakout. We also have another one called Agro, which have appreciated quite a lot the last few days. There's a little bit of a pullback now, probably pulling back to this support level here, and then breaking out from this formation here. So target would probably be, let's do a more little conservative, or it's not very conservative, but breakout of this should probably be, target should probably be $15, 14, $15. Here's another one. This have been pumping quite heavily the last few days. Um, we see this nice formation here. Target of this is already broken out on Friday, so this is probably going to gap up on Monday. And target is about 20 US dollars, which coincides with the previous top here in 2018. So that is basically what I've been doing, is holding a little bit of gold, a little bit of farmland, short term, and then probably going to sell that at some point once the targets are reached, and go back into crypto ETFs. So yeah, that is basically what I am going to do. So of course you need to do what you need to do, but I'm just telling you what I have done and my thoughts on inflation. So I guess that's it for today. Thank you all for watching, and I see you next time. Bye for now.